Good day, everyone. Good morning. Welcome back from the coffee break. Hope you enjoyed your coffee break as much as I did. I had both a coffee and a smoothie. It was a very productive break. Um, Moving right back into our agenda. We are on time. We're on schedule, and thrilled to be joined by our next speakers, Paul Klein from Impact, and he is joined by Esther Pan Sloane, who is the head of partnerships for the United Nations Capital Development Fund. So really excited for this conversation. And on that note, I'm going to turn things right over to you, Paul and Esther. Thanks so much for joining us.
Thank you, Brad, and thank you for Esther for being here, of course. Today, just so great to be here, and just congrats to Brad and Chris for an amazing conference. First of all, it's been just a pleasure to participate. But today, I have the real pleasure of speaking with Esther Pan Sloane, who, as you mentioned, she's the head of Partnerships, Policy, and Communications for UNCDF, which is the United Nations Capital Development Fund. And before that, she's done incredible work as a diplomat in the U.S. and also was part of the team that negotiated some of the things that were most important to all change makers today, which is the 2030 Agenda and the Sustainable Development Goals. So welcome, Esther.
It's a pleasure to be here. Thanks very much, Paul.
Yeah, and I was just thinking that you and I met at a few years ago at a conference. I think it was a social finance conference in Boston. And I remember speaking with Esther and thinking, wow, she knows so much about stuff that I don't know. And I was so impressed with our conversation, and just such a great pleasure to speak with you today and to share this with everybody here. So this is a Change for Good conversation, and which Impact started these earlier this year. It's just a pleasure to be bringing this to the Partnership Conference. And I just wanted to share with everybody here that it's not just my conversation with Esther. We're really looking forward to hearing from everybody here today. And I know after you hear what Esther has to say, you'll have lots of questions. We hope we can get to as many as we can. Really just to jump into it, I was thinking that, today I think that it's inarguable that what we've seen is that those people around the world who are most vulnerable are even more vulnerable today as a result of COVID. So, and it feels like, and the paradox is that, these people are vulnerable, yet the organizations that exist to help those people, the nonprofits, NGOs, and small businesses that employ them are themselves going out of business very often. I think that someone said that here in Canada, approximately 20% of charitable organizations are or have gone out of business already. So Esther, I would just love your thoughts on, from what you see, how is this all affecting the investment priorities and partnerships that you're responsible for at UNCDF?
Great. Well, thank you so much, and good morning, good afternoon, hopefully not good evening to everyone following the conference. So UNCDF is an aid agency that focuses on the poorest 47 countries, which are known as the least developed countries in the UN. And so they already are facing a range of challenges with limited government finances, high dependency on overseas development assistance, inability to access sources of capital that are available to more developed countries, particularly for small businesses and enterprises within LDCs. So when COVID hit, we saw that there was just a devastating impact across these countries, because not only did their kind of traditional sources of revenue like tourism or overseas development assistance have really negative impacts and decline, but then all of the economic activity that was supporting them in terms of small business and job growth and activity within the informal sector, which accounts for quite a lot of economic activity in least developed countries, that was terribly affected, because you can't be a market vendor who accepts cash for your tomatoes virtually, right? And so we saw that all of these supply chains just broke down, and a lot of small business owners could not access markets, and the ones that had not digitized and taken steps to kind of make their businesses resilient in terms of other ways to access markets were really badly affected. So it really changed UNCDF's priorities for this year. I mean, we always have a focus on the poor and vulnerable in least developed countries. We have a focus on supporting small and medium enterprises and local governments, municipalities at the local level. So what we did is we simplified a lot of procedures within internally, and the UN did this as a whole, to make things like pushing out emergency grants easier, to simplify procurement processes, to allow us to hire people kind of in an emergency way without going through the 6 months of vetting that you usually have to do to bring people on board. So we were able to, in March, pivot where we immediately went to all our major donors and said, is it all right with you if some of the grant funds that you've given us that we will not be able to use now for this year for activities that we had planned, can we repurpose it for COVID responses? And they all said yes, which was wonderful. And all of our donors were able to keep their funding to us consistent this year, even though they expect that there will be some decreases next year, especially for the European donors who are tied to their GDP. So we were able to repurpose money that we were not going to use under our traditional work plan and push it out to, say, local governments. We did emergency grants to municipalities in Bangladesh and 5 other countries with a WHO protocol. So we could say, here's money for you at the local level. This is how to, procure PPE. These are the considerations you need to have in effect for safety of government workers, things like that. We immediately assessed our own loan portfolio, where we make loans and guarantees to small businesses in least developed countries. And we gave, I think, everyone who had outstanding loans essentially payment holiday till the end of 2020. And then we renegotiated their loan terms. Some of them, by the way, didn't need a payment holiday. So some companies in groceries and other things really just saw an uptick of demand. And so they were able to keep paying on time. And then we did things like respond to requests from governments. So for example, in Uganda, the government came to us and asked us to help a business called Safe Boda, which is essentially Uber on motorcycles, where people would, pick up passengers and drop them off somewhere else. They have 18,000 drivers, and suddenly Kampala was locked down and no one could go anywhere. So all these drivers were going to lose their jobs. So we helped the company repurpose their kind of online presence to add grocery delivery. So suddenly the drivers could pick up groceries from the market, pay the market vendors, and then bring them to people who were social distancing at home. So it saved the jobs of all those drivers. It allowed people to, comply with social distancing, and it kept people who are informal vendors linked to the market, and it helped them actually reach more customers than they would have otherwise. Amazing. So we really saw that there's a tremendous demand for finance in the right forms and at the right level, which we did not see and are not seeing coming from these major stimulus packages that are going out. A, those are mostly in developed countries anyway. And then B, as we've seen in the United States, most of that stimulus ends up going to more established businesses. So the real kind of mom and pop shop, informal, small business that, critically needs that funding to not shut down in the next 3 months is really not getting it.
Well, thank you for sharing that. The other thing that I think it would be helpful just to hear a little more from you about, because I think a lot of the audience in this particular partnership conference, we've got people, a lot of charitable organizations, a lot of corporations. What you've talked about and what we've talked about before is the role of, as you said before, SMEs, smaller businesses as agents of social change. What, just for people here, I think they'd love to hear about, how do you see that? In what ways are businesses contributing this? Because I think a lot of times, I think people think it's charities, only charities and nonprofits are doing this, but businesses are contributing in huge amounts in different ways, and just love for you to elaborate on that.
Yeah, absolutely. I mean, I think this is just a fundamental economic model, right? A charity needs donations every year, but a business that's successful can sustain itself. So if you build a business that has a social impact or an SDG impact or development impact that sustains itself and grows as a business, you as a funder no longer have to support that business, right? And then the impact continues indefinitely into the future. And we have found that at the local level, small businesses are the most effective poverty eradication tool. So if you get credit and savings in the hands of enterprising entrepreneurs, they will use it. They'll pull themselves out of poverty. They'll move their families out of poverty. And then they usually support a long chain of relatives, nieces, nephews, the home village. So it's the same kind of entrepreneurial spirit that you see in Silicon Valley and all around the world. It's just at smaller scale, and these entrepreneurs face bigger challenges. So what we have found is that in our work for financial inclusion, for example, we really focus on bringing poor people into the market by giving them access to savings and credit. But also we give grants and now loans to private sector companies to extend their services to the poor and underserved communities. So if you're a phone company and you have digital payments available on cell phones, instead of staying in the capital where there are lots of middle class people who you think you can make a profit from, we will give you a subsidy to move to poorer regions. And then the fact that poor people can send money on their phones and get payments on the phones means that there's less corruption, there's less leakage, there's less chance of getting robbed on your way home from the market. Women can save, they build a credit history. So there's so many benefits that come from allowing people access to basic business tools that, entrepreneurs in developed countries already enjoy. And the most important one that we found is access to capital. Because entrepreneurs in poor countries, like everywhere else, need to borrow money to grow their businesses. And we've really found that there's just a stone wall they hit where you can be a successful business, you're trading in cash, you're very profitable, but no bank will lend you money. And one of the things we're trying to change is the risk tolerance of banks within LDCs, so that instead of buying government bonds or sending their money offshore, they will, allocate a portion of their funds to local businesses to see that local entrepreneurs are worthy of their investment and can pay them back. And so one of the things we found is that if UNCDF plays a critical role as essentially the guarantor or the first mover with a concessional loan matched with a loan from the bank at a commercial rate, a business that has a sustainable development impact can get a loan and can get access to capital that otherwise they would not. And then usually what happens is we come in the first round, they pay us back, and the next time they go back to the bank, they get a loan without us. So we've moved that company onto kind of the pipeline of being a viable commercial entity, and we know that their SDG impact will continue.
Amazing. So the other thing that is happening, of course, is that NGOs, charitable organizations themselves are recognizing the power of business. And, you've got, a kind of explosion of social enterprise operations within charities or spin-offs from charities. How's that impacting? What are you seeing, and how's that impacting what you just said?
I think it's a good trend, and I think it addresses a long-term challenge of aid work, which is that you always need somebody to give you money, right? And certainly in the UN, and part of my thinking on this is shaped from my time as the US delegate. For 4 years, I was the US delegate who oversaw all the US money going to the UN development system. So, huge checks, hundreds of millions of dollars. And it does not take long to realize that that money has been flowing in this direction for 80 years, and most of the countries that it's supposed to help are still poor. So clearly there must be a better way to do this, right? Most of the aid money that's delivered from governments through the multilateral system or even bilaterally does not reach the end beneficiary. And if it does, it's in a way that they can't use it, right? It's some kind of tied aid, or it's not, a loan to a business that can use it for operating costs or for CapEx or for whatever. So I think it's a good trend that charities and NGOs are looking at what are more sustainable models of ensuring that our impact continues. The problem is that it's a different skill set to build a successful business than to, achieve development impact or run an NGO. So one of the things we've seen across the UN is that as the UN is pivoting towards innovative finance, we have to find new skills, right? We need to hire new types of people, because someone who can assess the creditworthiness of a small business is not the same person who's assessing like the normative impact of your gender screen. So development people and finance people have different skills, but now a lot of development people are being asked to do financial type things. And we see that there's a good amount of talk about it, but there's less kind of pragmatic action on the ground. So we would like to see more seeding of companies, supporting of companies, nurturing of companies, and then that very kind of delicate dance where somebody intercedes for that company with local banks and helps them work out a deal that benefits that business. We see that that's really missing as well.
Well, someone said to me, being an entrepreneur is hard, and being a social change agent is hard. And now people are, we're asking people to do both of those at the same time. But I
And
really
make profit and
yeah,
stay in
and make
business,
profit. Exactly, and measure what they're doing.
Yeah.
So the other thing that that we've talked about is today I think we're seeing it's not one thing or the other, like as you were just saying, like there's business making social change, nonprofits are making social change, and the way investors are thinking about how to mobilize capital for the purpose of social change also changed. And so it's now becoming not one thing or another. So it used to be you would invest in something or you would donate to something. And now we see the whole world blended capital emerging. So I think first of all, please explain to everybody what is blended capital? What do people need to know about it?
So the OECD definition of blended finance is using public finance to attract private sector finance or commercial capital to somewhere it would not otherwise go. So in our kind of definition of it, the way UNCDF uses it is we will use taxpayer money that gets donated to us from governments, and we will use it with no cost of capital to make a concessional loan or a grant to an enterprise that then uses that money to attract additional commercial finance that without our piece, they wouldn't be able to get. So that's kind of the general definition of blended. And UNCDF has done reports for the last 3 years on blended finance in the LDC specifically. We worked with the OECD and they added indicators to track this because they weren't looking at it specifically in LDCs. And we found that overall, of all the public money used to attract private sector finance, only 6% of it makes it to LDCs. And so, there are a lot of good reasons for that. It's easier to do deals in middle income countries. It's easier to do big deals. It's easier to do profitable deals. So, but there's a mismatch between the money that's out in the system, even the money that goes to development finance institutions, which is meant to spur growth in poor countries. That money has to protect its credit rating and earn a 15% return. And then what we're seeing at the lower level of LDCs is there are lots of great companies, but there's no way they're meeting that standard. So blended finance is really a way to kind of take different colors of money, different money that needs to do different things, and combine them in a way so that everyone in this new kind of combination gets what they want. The commercial investor can meet their rate of return. The government that's looking to create jobs can see that their money is attracting in other money, which is always a very attractive argument for governments. And then a middle section of maybe foundations or donors or family offices can say, okay, I'm preserving my capital or earning a small return, but within this stack, I'm seeing all this other impact happen. So what we try to say to people is to think of your money as a spectrum, right? There's the money you would donate, there's money that you would invest but accept a lower return on, and there's the money that needs to pay for your retirement, your kids go to college and whatever else. But within that spectrum, you can do a lot of different things with the money, and then maybe you can consider combining them in new ways to achieve greater impact with your whole portion in a way that you maybe hadn't thought of before.
And can you, if there's maybe an example that you could think of that kind of brings what you just said to life. And there's another question I have, which is an example. Like, is this happening in the work that you do and that the UNCDF does is in developing countries largely? And I'd also just love to know if the kind of thing that you're talking about in this new use of capital is happening here as well in the US, Canada, other developing countries. Any, hadn't really thought about that until right now, but.
Yeah, good question. I mean, I think that, there's a long history of governments in developed countries spurring business, right? Like US government gave a $200 million loan to Tesla in 2008 when it was about to go out of business. And that Tesla used that to kind of get on its feet, and now it's a very successful company. So governments invest in businesses all the time. There's tons of subsidies available for business in developed countries. And that's essentially a form of blended capital, right? A bailout is using taxpayer money to support private businesses that will make a profit in the future. So a practical example of how we use it is we see that there's this missing middle finance gap, right? We see all these SMEs in least developed countries who have terrific sustainable development impact that they can't borrow money. And then we see in the international financial system, there are tons of investors like Nordic pension funds who say they want to have an SDG impact with their money. But what they're looking for are tickets of $100 million or higher, 17% return, low risk, And then what these companies are looking for is a loan of $250,000 in Tanzanian shilling, with massive risk. So there's no way these two sectors will meet, right? These deals do not meet the standards of the pension funds, and pension funds will never do a deal that small and that risky. So what we've done with a impact investor based out of Switzerland called Bamboo Capital Partners is we created an SME fund. So it's a for-profit fund, but it's focused on small and medium enterprises in the LDC. So we use public taxpayer money to nurture these enterprises, get them on their feet, get them kind of through their first loan. We will lend them $250,000 to $1 million. And we do only debt, no equity. Then when those businesses progress and they need more money, say between $1 million and $5 million to continue to grow, they go to the Build Fund, which can give them debt, equity, and other options for financing between $1 million and $5 million. And then above $5 million, they should be able to go to the commercial markets and get money from anybody. So the goal there is to build a pipeline of investable projects and then give kind of pension funds and other investors who say they're looking for this type of impact a diversified portfolio with risk being absorbed by a first loss layer, where governments have given us grant money to sit on the bottom and say, okay, commercial investors, we will guarantee your investment with this bottom layer. And then a mezzanine layer for people who are looking for maybe slightly concessional return. And then a top layer for people who want close to commercial returns. And then we hope that that package makes it attractive to invest in SMEs and LDCs, which is on no one's list of top places to go. Like really, only development people think this is like the next area because of the risk and the unknowns.
So you're talking about mobilizing capital in incredibly powerful ways from sources that have a lot of money. And very sophisticated ways of looking at social change through the use of different uses of capital and finance. I want to go to the other end of it, the other side of it, which is actually something I talked about at this conference last year, which is the role of people with lived experience. So you've got all this thinking, money, privilege, and so on at one end. And then ultimately it's to make a difference for people with lived experience on the ground in different countries. So my question is, in what ways are those people, the people with lived experience, involved in what you just said?
Absolutely. Well, so our ultimate beneficiaries are always the citizens and governments of least developed countries. And so for the governments, one of the key things we do is give policy guidance on, say, how do you spur digitization or allow digitization in your markets without having Facebook or Google come in and own everything, right? Like, how do you, as a poor country government, set up regulations that will protect your consumers, for example, from predatory lenders? Or how do you digitize your own social security payments so that your citizens can receive their payments with less waste and corruption? So that's one of our clients. And that's very important because those are the governments who are running their own policies in their own countries. And they come to us to say, hey, this is what we need. So we're always responding to their needs. Like the UN is only ever in a country because the country invites them. We never go anywhere. We never force anyone to take anything. The government has come to us to say, we need your help on X. And so then we can offer it. On the other side, when we support small and medium enterprises, it's those entrepreneurs who have the ideas, right? We're not, the way that we find these entrepreneurs is we do it a challenge, an open challenge call. And we say, we would like to have, microinsurance for farmers in rural areas of Papua New Guinea who can help us solve this problem. And then people from around the world apply. And these are for-profit companies who say, I have a great app, or I have the system, or I have whatever. And then we choose the ones that we think will be the most effective at solving the development problem. And then we work with them. But the other ones are all still there in the pipeline. So we are now looking to say, okay, this is a great company. It didn't, meet our specific development need, but maybe we'll just pass it straight to Bamboo and they can get a loan from this build fund. Right. So the ideas are always coming from the ultimate beneficiary or recipient. It's not coming from us. We are there, just there to support and be essentially their guidance counselor to help them access the resources that are out in the international system that are supposed to help them, but that they too often just can't get to.
And I would say that's something that everyone here should keep in mind. Whether if you're in a corporation, charitable organization, or whatever, just that is something that doesn't happen enough. What you just said, I don't think. I know we don't have, it's amazingly enough, we don't have too much time left. And it's something that I feel said to you the other day, I could talk to you all day about this. But in terms of the people who are here today, and you've got a lot of people from corporations, large corporations, some people from nonprofits, charitable organizations, and they're thinking, well, this is all like, how does it, you've got these different blended finance, all these different things are happening. Some things are happening in business that are outside of what I do directly, maybe as a charity. What does this mean to me? And so from what should people here know who are maybe doing currently in a little bit of a more of a, I don't know, a more conventional role of social change? What does this mean to them, and what would you advise them in terms of how they should think about this stuff?
Yeah, well, what a privilege to be able to give advice to such a qualified group of people. I would say never discount the power that you have as a consumer and as an investor. So as a consumer, we're really seeing that the finance industry is responding, even in the United States, which is far behind Europe, responding to demands from customers, including pension funds and retail investors, for ESG sustainable impact products. Right? So now every big platform has an ESG fund or, something to invest in. We have one, it's called SDGA. It trades on the New York Stock Exchange. It's a nonprofit basket of stocks that we have selected for economic impact in LDCs. And the management fee comes back to us as a charitable donation. So there are increasingly venues and opportunities and vehicles for you as a, say, personal consumer with a pension plan to say, where's my money invested and is it consistent with my values? So that's one. Then B, if you have a role in an organization, corporations are increasingly feeling this pressure, right? They're saying, they're facing scrutiny from investors and their boards of the diversity of their management teams, like the transparency of decision-making processes, HR, all of these kind of social trends that we've seen really explode this summer are coming to corporations too. So if you are publicly traded or you are scrutinized by any public entity, someone is going to come to you soon enough, if they haven't already, and said, what is your plan to diversify your workforce or ensure that transgender people are protected, or, all sorts of these issues. So you have to be ready to engage with that and know that those social pressures are going to come and impact you as a business, because especially this new generation of consumers really care about what kind of businesses are getting their money. And then for charitable organizations, I would say, if you're lucky enough to have an endowment, that is a pile of cash that you're sitting on, and you can affect social change with how it's invested. So one thing that we've seen at UNCDF is that financial advisors really reflexively, many of them still have this kind of old-fashioned attitude of like, you can't invest in impact, you'll give up return. And your responsibility as a fiduciary is return at all costs. But consumers and investees and pension plan participants are increasingly saying, I want you to divest from fossil fuels, or make sure that all companies in my pension plan have HR policies to support diversity, or whatever it is. And we've seen in the downturn that ESG vehicles can actually outperform traditional ones, because you're selecting out for well-managed companies, right? Companies that value their employees, that have more diverse decision-making processes, tend to do better. And one thing I learned from Moody's, which I didn't know, is that companies that have women on their boards pay a lower cost to borrow money because they are seen as better credit risks, right? So there are all of these benefits, and the data is now coming out to show that you can put your money in an impact portfolio and not give up return, and then respond to all the demands from your constituents to say, yes, I want to have a secure retirement, but I don't want to do that by investing in oil stocks that will burn up every tree, on the planet. So there's a lot of power that we have as consumers, as investors, as holders of, pension plans, as holders of endowments, and you can start to investigate ways that you could change your financial allocations to reflect your values and the values that your institution is working for. Even if you don't move the money right away, it puts heat on the financial industry to create those products. And then it puts heat on the industry, like BlackRock has an ESG fund. It puts heat on them to say, okay, how real is your ESG, BlackRock? Like, is this just another way for you to make money? Or are you tracking your impact in ways that, people here will know are legitimate? So the more pressure, the more kind of market demand there is, the sooner the industry will change.
So, I thank you for saying that. I never thought about this before, honestly. I never thought And it's a great idea that if an organization, a charitable organization, has got an endowment, has got capital invested somewhere, say you're a health organization, that capital could be invested in a way which is actually contributing to the mission of the organization in and of itself as well. Not doing bad things, but actually intentionally supporting organizations that may themselves be improving the health of people in different ways. So I love that. I think that we're almost out of time, but there's always things people said, have said all these, brilliant comments, but there's actually no questions. So I just throw it open. I'm not sure exactly how much time we have left. And if anyone has a specific question for Esther, now is your chance.
Questions all have come in, and I'll pose them. And I think that last comment on impact investing, which I think Shauna talked a little about this morning about the cooperators and their investment in the Community Forward Fund, but charities can deploy their endowments and their resources. Firms like Rally Assets in Canada are real leaders on the impact investing front. So even if you don't have a large endowment, there are still opportunities for you as an organization to make an impact through your investment pool. Esther, you talked. These are some big changes that companies would have to probably undertake in order to think, to think in this direction. So, from a cultural perspective, how do companies really make those changes? These are large, often bureaucratic organizations that need to make some fundamental shifts in their thinking in order to employ some of the strategies that you've discussed. How do they do that?
So, and I'm not a corporations expert, and I'm not a developed countries corporations expert, but I can tell you that experience that we did, that we had creating our exchange traded fund. So we worked with a nonprofit fund manager who has created 3 funds so far, one for the NAACP on minority empowerment, one on women's economic empowerment with the YWCA, and one with us for least developed countries. And the idea there was that we would, each social organization would create a list of screens to say, this is how we, the experts in this particular social issue, would judge a corporation as being positive or negative. So for example, for the NAACP one, they just dropped Facebook because they added as a screen for their fund, the company cannot profit from hate speech. And they met with Facebook, and Facebook was not willing to edit some of the things that show up on their platform. So it's now out of the NAACP portfolio. And one thing that was unexpected is that, for example, McDonald's is in the women's fund and was thrilled because they said, well, this gives us another argument, right? This takes us to the CFO and not just the chief sustainability officer. If we are in kind of a fund and seen as virtuous in our group, that's a competitive advantage against other kind of stocks in our group. And if we can take to the CFO this argument that if we make these internal changes on HR, promotion of women, things like that, that helps our stock price, it helps our visibility, it puts us into a group that is recognized as better than others, then you have another advocate in the C-suite. So then it's not just the CEO saying this is important, it's not just the CSR officer, it's the CFO saying, hey, our price of capital is lower and our stock price is higher. So then you build more support for the idea of making these changes because it benefits the business. And I think for corporations, the bottom line is the business has to keep making money. So anything that you're doing on the social impact side has to be part of your core business model. It can't be a charity or a side project because otherwise it's then too easy to ignore.
Yeah, no, very well said. Thank you so much. Paul and Esther, really do want to thank you for joining us again, taking the conversation in a very different direction, really causing us, I think forcing us to think differently about the relationship of the corporation and the world to its world and to its community, and which is, I think, really one of the fundamental things that we talk about in the conference. It's not just about the corporate charitable partnership, but what is the relationship of what is the role of the corporation in civil society? Really, I think a really important set of issues that you touched on. So thank you so much for joining us, Esther. Where are you located?
In New York.
Okay. Just thought we'd get that. We're getting participants from all over, so thought I'd ask. Thank you again, Esther, for your time. Really appreciate it, and hopefully next time we can have you up here in person to visit.
Perfect. We love Canada, so we're happy to come to Canada anytime. Thank you so much for the opportunity to speak to everyone today.
And thank you, Esther. Thank you, Brad. Thank you, Chris. It's a pleasure.
Thanks so much for joining us and for your support.
It's a pleasure.
Take care. Thank you.